Welcome. My name is Thomas Ledford. I'm here to share in this video sections 4 through 6 question and answers from the Career Income Tax Preparation Training course that you signed up with to learn how to prepare individual income taxes online. In this video, I'm going to go through all the different questions inside this scenario and give you some resources that's going to help you to get the answer to these questions inside this particular video. So everything that's included in this course will have some form of video tutorial presentation to go with it to help you clearly understand what each form is all about, how to prepare each form line by line, and just to make sure that when you finish with this course, you be able to prepare individual income taxes from a basic level. That's what this course was intended to do. So sections 4 through 6, question and answers, document 1, it's about allowing you to learn the specific laws and requirements for basic income taxes by asking you a series of questions, which means you have to go to the publications that's associated with this income tax course to be able to answer the questions, which will allow you to read the information to get the answer you need to come back to be able to answer the questions in the question and answer section of each document. So the first one says, what age do you have to be to receive 1099-R and not get penalized when claiming it on a tax return? This question is, you have people who receive retirement income. That's what the 1099-R stands for. And there's different ways to get it. You can be working a job where you have a 401k plan and you pull money down to borrow from, and that's one way of getting it. Or you can be retired from a job and receive retirement income. That's another way to get it. But if you're under 59 and a half years old and you're receiving 1099-R income, regardless of how you get it, you will be penalized a 10% tax on the money that you pull down. So for instance, say if you were working a job, you're in a 401k, and you needed $10,000 to buy your first home with, in that situation, you would not be penalized for drawing the $10,000 out because it was used to buy your first home. But say if you just drew the $10,000 out just because of hardship and hard times, and you needed to make ends meet, and for some reason your regular pay wasn't sufficient, then you will be penalized an extra 10% for pulling that money down, because when at the end of the tax season, they'll send you a 1099-R statement, and in box 7, it'll have the code which states why you, states if it's a normal distribution, or is it a reason you drew it out early, or is there any exceptions to that? And if you have an exception to the rule of drawing it out early, then you won't have to pay the additional 10% tax on the money during tax season. The next question is, what is 1099-G and why do you receive it? A lot of where I teach is through the form's numbers. You'll have to learn which style is best for you as time goes on with this lesson. So 1099-G stands for unemployment compensation, which is on line 19 of the 2017 1040. And the way you receive it is if you're no longer working a job and you were laid off or lack of work, and you weren't able to work, and so you filed for unemployment and received it. That's how you got your unemployment. Schedule E is what type of income. Schedule E is for people who have rental income. And the tricky part about Schedule E is the supplement of loss. It's basically about for people who have property that they're not used for income purposes, then they'll use a Schedule E. But if you have rental income, meaning you got maybe a building or two and you strictly using them to collect rent from because you've rented them out to individuals to live in, then you fall under Schedule C, which means you should be filing this on a profit and loss from business form during the upcoming tax season. So that's the difference between Schedule E in general and Schedule E as a business. The next question is, what is a 1099 SSA and what age do you have to be to receive it? Explain. Well, what I've learned in my career is that you have a lot of people receiving this type of income, which is Social Security. Some people are receiving Social Security disability benefits who are way too young to be receiving Social Security in general, so it's fall under disability. And so there's no particular age when you're getting Social Security disability income, because 9 out of 10, you're either getting it for yourself or you're getting it on behalf of someone else. So say, for instance, you were married and your husband passed away and you got sick and you couldn't work anymore. And so you applied for disability and they gave you Social Security early because of that disability. Then that would be one of the ways you receive Social Security benefits. So that's how that works. The next question is, what type of job title do you have in order to deduct educator's expense on your tax return? Well, most people who able to write off educator expense are teachers, people who work in school systems, who teach students in front of classes, are able to write off this educator expense up to $250 on their tax return if they're itemizing. The key is, if you're not itemizing, then there's nothing to write off. So that's how that works when it comes to that. The next question is, what type of expense is Form 3903? Again, like I said, my teaching style is based on numbers. So 3903 is moving expense. For the upcoming tax season, the moving expense has been removed. So you won't be able to write off moving expenses if you qualify for the upcoming season, because due to the tax reform changes, moving expenses has been taken away for people who have moving expenses going forward. So for 2018 and beyond, moving expenses is no longer a deduction you can write off, which is directly related to relocating from one location to another for a new job. So say, for instance, you lived in Chicago and you were relocating to New York for a new job, then you would definitely qualify for moving expenses, because part of the requirements for moving expenses is you must move 50 miles farther from your old job to your new job in order to qualify for the moving expense, and it must be directly related to getting a new job. So that's how the moving expense works, which is 3903. The next one is, what are the 2 requirements to qualify for the expense, which I just mentioned. The one requirement is distance. You must have the distance of 50 miles or more when it comes to relocating from one place to another in connection with a new job. And the time test was another requirement, which you'll be able to find on the form, because the form has instructions that's associated with it that you can read about, which will tell you what the second requirement is. I gave you the first one. The next one is, what is Form 1098E and what circumstance causes you to receive this form? 1098E is an interest income, interest deduction. Basically, people who went to school, got student loans, and now they're repaying back that money. The interest that's they paying back on, you receive a statement every year, which is a 1098E, showing an interest that you paid on the student loan that is deductible in the adjusted gross income section of the 1040, where you can write off up to $2,500 of that, possibly based on your filing status and your income amount. Those play a factor in being able to write off interest from your student loan. The next question is, individuals who strictly work for themselves, who normally have what type of health insurance? Well, for people who strictly work for themselves, they are considered self-employed individuals or small business owners, and the type of insurance they would have would be self-employed health insurance, which they would have to go out and purchase for themselves in order to protect them and their families when it comes to having health insurance and life insurance and different types of insurance that some jobs may offer. When you strictly work for yourself, then it's your responsibility to have your own retirement account, your own health insurance, your own life insurance. Those responsibilities are strictly up to you to make happen, because if you don't make them happen, they don't happen at all. So you will end up retiring at 70 years old with no retirement account because you didn't understand that you need to have one, or you didn't see the value in getting one. So that's the situation when you work strictly for yourself. Those are some things that you must put in place that's going to protect you in the long run and your family when it comes to being strictly self-employed. The next question is, when an individual was married but now divorced, what are those payments referred to for the individual who received them? Well, people who used to be together and they divorced, and the spouse receives alimony, that goes on line 11, and that's up to that's one of the interview questions you will ask a person. Have they ever been married? Are they divorced? If so, do they receive any spousal support or child support? And mainly, alimony is income that they must report on their tax return, and the person who paid it must report it will report it on their tax return, because that's a deduction to them from their income, which will definitely help them a lot, especially if they're in a high tax bracket. And so, for people who receive alimony, and for the person who pay alimony, the tricky part is, if I'm paying alimony to an ex-spouse and I'm filing on my tax return, but she doesn't file on hers, then that's where the problem comes in. That she will get a letter from the IRS stating that she should have filed alimony income on her current tax return and didn't, and so she needs to do so, and which will now result in a deficit, especially if she's already filed a tax return, already received a refund, and then now this situation pops up where she received $15,000 in alimony but didn't report it. Then now that's going to cause her to have to pay back the money she received because her tax return was inaccurately prepared in the first place, which produced a false positive refund in her favor. And so that's what happens in that type of situation when it comes to alimony. And she's not reporting it on her tax return, but he did. And now it comes back to bite the person who received the alimony. The next question is, Wendy Nelson relocated and started a new job. What two requirements must be met in order to qualify for the Form 3903? Well, I basically asked you this earlier, so you should have the answer already when it says what type of expenses is Form 3903 and what are the two requirements to qualify for the expense right under that. So I basically just asked you the same question over just to see if you are doing any studying and reading this information so you can truly learn it. That's what that was all about. The next question is, the deductible part of self-employment goes in what section of the 1040? Well, on the 1040 2017, you have the income section, and right under you have the adjusted gross income section. And so it's a section there that deals with the self-employment part of the income when it comes to calculating the net profits from people who work for themselves, which is generally line 28. And so the next question is, when paying back your student loan, what type of deduction can you generally put on your tax return? Well, like I said, student loan interest basically goes in the adjusted gross section of your 1040 tax return. And if you studied and read the information that I already given you, then you should know the answer to that question, because I basically repeated a couple of questions on purpose just to see if you were on top of reading and studying this information. That's going to allow you to learn this stuff going forward. And so in all the videos, they will cover all the content that you receive by email when it comes to sessions 1, 2, 3, question and answers, sessions 1, 2, 3, the hands-on portion of it. We'll have a video for it. sessions 4 through 6, question and answers. I have a video. Session 4 through 6, hands-on. We have a video for it. So basically everything that you will receive by email will have videos created on your behalf to help you to better understand the information. So when you're reading the publications and when you filling out these forms by hand in the comfort of your own home, if there's anything you forgot or unclear about, you can always refer to a particular video that's going to give you some information that's going to allow you to get the answer basically to the problem you have. And if you still have an issue at that point, you can reach out to me with an email or a text or even a phone call during certain times of the week based on people who enrolled in the Career Income Tax Preparation Training course, which is an 8-week course in general, but you have 12-month access to it, which means you can finish in 8 weeks or 18 weeks. It's up to you. It's all based on your agenda. It's all based on what your motives for taking this course is really all about. If you're taking this course because you're looking to make money for the upcoming tax season, then of course you want to dive right in, learn as much as you can. Any questions or concerns or answers you have or something that's unclear, reach out to me so I can go through the information with you and help you to get a better understanding. So when tax season comes around and it's time to file tax returns, if you look to leverage the knowledge you have now and my support to make money in the upcoming tax season, then these videos will definitely be a aid to assisting you to get that done. And even if you can't get in touch with me, if you feel that going through the videos and you can take notes and remember what videos titles had certain information under them, then you can go back to refresh to certain things quickly, opposed to just randomly going through videos because you didn't take notes and you didn't remember what particular videos had what particular information inside of them. And so in this video, it will be made available to you every week for the next 8 weeks. Then again, after that 8 weeks, you'll have access to all the videos that was created for this course that you can learn from. That's going to help you to prepare individual income taxes by hand from the comfort of your home and to be able to answer basic tax questions for people who are going to be your client or potential client going forward in the 2019 year for the 2018 tax season. And so I will see you in the next video.